Hey guys, welcome to the show. And for those who were with me a little bit earlier on, really great. It's been a long day, so long morning so far from where I am, long day for some of the guys. What I want to do is just have a look at where we were with the market. I say where we were with the market, but where we presently are in terms of just what we're looking at earlier on. So quickly share my screen. There we go. Okay, so Hang Seng 50. Now, when we left, remember we had okay, for those who are with me, we had tightened our stop now to break even because we closed right here. Well, the market closed right here for the 45-minute break. And we said we were not sure whether the market would gap up and broke our stop size or which way it would go. But as it turned out, the bears tried to break beneath that trading range and they have failed. So very bearish, and we're at a break even. So if you're still in that trade, just hold it at break even and let's watch and see what happens. What are we expecting? What are we waiting for? Well, we're looking to see if we can get another opportunity to get into the market. So earlier on, I'd said to the guys, if you're taking this trade, either put it at full risk, which would be fantastic, it'll be a break even, or put it at half risk, half the risk that you'd normally put into a trade. And then if you get another setup, double top, whatever the case may be, if we're not stopped out, we take a trade. Right now we're at break even. So if you do get stopped out, that is still perfectly fine. You just take the trade again. So we hold on into the market and see what we get. The other market that we've been looking at is German 30. We said this pattern, bear breakout and channel completed here. So we are presently waiting where this test, not quite close, but that's fine. We're waiting to see if we get any setup here to go long, double bottom with a wedge low, wedge, 1, 2, 3, represents 3 attempts by the bears to sell off. And they failed because the bulls are strong in the market. Bears tried again to sell off, but again reversed by the very strong bulls. So we just want to find a way to get to the market, and we also said what the bears see. Remember, there's always two sides to the equation. If we're thinking bullish, like we are thinking we want to buy, it means the bears have to be selling. Otherwise, there's no one to take the other side of the trade. So if the bears are selling, the bears are thinking, hang on, maybe we are strong enough to keep selling, break beneath this trading range, this low of the wedge, high of the pullback, break beneath this, and try and get to a measured move. So that's the thinking of the bears, because if they do get that, then they would have broken beneath the low of yesterday, which is a strong level of support. If they're able to break beneath that, get to this measured move, and still have a breakout beneath the measured move, then we just change our thinking. Second, bears are strong. Can't ignore that. You can't keep holding to the bull thesis. Bears are strong. So at that point, we wait for a pullback testing the breakout beneath the low of yesterday. Okay, that's if the bears are strong. Presently, our thinking is pattern is complete, wedge bottom, high low double bottom. If we get any reversal, we look to take a trade. Okay, it's a reversal trade, so we know if it goes away, huge profit potential. But reversal trades are lower probability trades. They are 40% chance of success, which means we need to manage trade. Okay, so that if it doesn't go away, we try and get out break even or with a small loss. Okay, higher probability trades are just for you to wait and say, I'll keep looking at the charts every 10, 15 minutes. If I see a strong breakout into a trend, any trend, bull or bear, then I'll jump into the market and wait for the pullback. And I'm not going to go for these 3-to-1, 4-to-1 returns. I'll just go for a 1-to-1. That's trend trading, high probability. Okay. Bears are not accelerating down. We had stopped break even, so that's fine. I'll come back and just explain the entry points in red and blue, what they are for the guys who are not in this session a little bit earlier on. Okay, so let's just look at the other market that we're looking at. The other market we're looking at is UK 100. Again, thinking we're up here and we're saying, hang on, that's the open of the day. So that's the low of the day. Trading range been formed. Maybe the bulls are strong enough to bounce off and accelerate above the high of yesterday, but instead at the open of the London markets, two strong bear candles. Okay, and then channel. Now, it's never random. These are the things that you need to just start adding to your market assessment. We looked at the breakout point. That's a breakout point. Breakout candle, we need follow through, but immediately there was a reversal. So this was a successful breakout, but we didn't get any way to get into the market here. I mean, if we'd gotten a beautiful kind of high test, bear candle, we've been fine. But this was trading range price action. No way for us to trade, tried to break up in this, failed, but the market created a channel. The channel itself tells us a complete story. I'm going to tell you the story after I drink some water. The story is simply, the bear pattern is completed. See, it's a complete bear pattern. Breakout channel. Why do I say it's complete? Because from the breakout point to the end of the bear candles in the breakout point, there is a measured move. The market got to the measured move. And then if you look at the start of the breakout, you call that the first leg of the move. And there's a pullback. The extension is here. So first leg, pullback, second leg, which is another form of a measured move. So the market got to that, tried to break up beneath that, failed at that measured move. At the very same time, the channel itself ended at that extension and tried to break up beneath. So the pattern is complete. So now we just want to find ways to go long in this market. So all the way here, we didn't get a pullback. We had an almost inside candle. And I'll explain this when I look at Hang Seng, then we'll come back to it. Then while we're saying we might get a high low, the bears accelerated down. 4 strong candles. The bears, the goal for the bears was to break out beneath this. You can put that in. Trading range. Low of the trading range, high of the trading range. The bears see that as their objective. They want to smash through the low of yesterday. And if they can do that and give a pullback, then they want to get there. But for the bulls, we say looking for a double bottom. We can't trade here because of the 4 strong candles. But let's see if we get a reversal anywhere in here. That does not breach the low of yesterday. If we do that, we can decide where to put our stops. Okay, so those are the three markets that we're looking at on the 5 minute. Just have a quick assessment on the, it's taking time on the daily. So there's all the 8 charts that we have. So I explained to the guys earlier on, I used to have gold and Bitcoin, and you know how passionately I did the analysis. But looking back at my results from the beginning of the year, I took 3 gold trades which were profitable. I took 0 trades on Bitcoin, just never set up. So I just decided there's no point keeping things on my analysis that are not going to give me an opportunity to extract wealth from the market. So I dropped Bitcoin and I dropped gold, and you can see now my new combinations: Euro versus dollar, UK, German 30, S&P, Hang Seng 50, Nasdaq 100, yen, and Aussie dollar. Now, I don't want to be looking at more than 3 charts on the 5 minute every day. So Hang Seng 50 and German 30, I look at by default. Okay, I do the daily analysis, but I'm up when this market opens, and the German 30 would have opened an hour earlier, and most of the profits I make in the past few months are from these 2 markets. Then the other markets, I wait for them to get to certain levels that I call my yellow levels. Then I drill down to the 5 minute and look for the opportunities. So UK 100 is interesting. We were waiting when all of this was forming. We were waiting and hoping the market might get back to test the high of yesterday or break out to this yellow zone, in which case would have looked too short. But as it turned out, the bears accelerated before even getting there. So having seen that, now the setup that we're looking at is that there's possibly buy opportunities here. So if we are able to get a reversal trade out of here, okay, and manage it successfully, when I have to hold that trade, and hopefully in the day, possibly to the US session, we get an attempt to break above here and still get to this level where we can get out, take our profits, and look for shorts. If it doesn't happen today to get up there, you know, but hopefully we might still take a trade. Doesn't happen to get there today, we'll look at it tomorrow, but that is still an area of resistance for me. So it's going to look cluttered, but let's see. Oh my goodness, look at that. It's horrible because of everything we've put in here. But that resistance level is just above the high of the day. Once I've gone through all of these daily charts, we'll go and open up and see it better. But presently, we're going to keep looking for a way to get long into this market, which may not be far. We've got 20 seconds left for this candle. So a little bit early for us. Let's wait a little bit. Now, Euro versus dollar. So the thinking with all these charts, okay, I remember I said I want to focus on 3 charts a day. So 2 are definite. Hang Seng 50, German 30, those are definites that I want to focus on. But I always want to pick a 3rd one to try and find an entry off the 5 minute that I can put a stop on the daily and hold it for as long as possible. So basically means I'm trading daily, but I'm taking a 5 minute entry, which means a tighter entry, and hopefully get rewarded. Euro versus the dollar. You know what? Let me just do this. Euro versus the dollar. Bear trend line from Feb 2022. This trend line started there, all the way down to here. Go to here, sold off. Go to here, sold off, but didn't accelerate down. But we are hugging the trend line. So I'm waiting for the euro to get, even if it breaks out above the high of yesterday, that little doji low test candle, When it gets to this level, the descending trend line, if I see it happening today, be it European, US session, I'm going to jump in and see if I can pick up a reversal trade and put my stop up here. This is a daily chart that I'll then just leave and hopefully will be rewarded going down. Okay. That yellow zone, what are the yellow zones? Where the market has bounced off it is 3 times. That's the easiest way. Went up, that high, came back, went up again, that high, came back, that high. So market went up here, 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 here. So a few times, but also with this descending level of resistance. So the bears are going to defend that. They've defended that level all the way down. Okay, so they just want the channel to continue all the way down. So I'm going to wait for that level. I keep looking, Hang Seng 50. Okay, so we're still holding on to our trade. We've moved, that green line is a stop line. So we've put the stop to that level. For those guys who have taken that trade. S&P 500. Okay, well, market went up. So this is interesting. Strong channel. We broke out above the channel, above the 20, and then failed to accelerate. Bears came into the market, double top, micro double top, another little double top here. Inside candle, bears go to the bottom. So micro double bottom, 2 candles, another double bottom. So we are in a tight trading range. So if we get anywhere near here, I'm going to switch to see if on the 5-minute chart we can get a reversal. Then I'll just have to put a daily stop because I intend to hold it for days. If that makes sense. Unlike Hang Seng 50, German 30, with all 5-minute trades, 95% of the times I get out beforehand, and 5% of the times, and I think Monday this week, was it Monday this week or last week? I don't remember now. Was one of the days where, took a chance, tightened my stop, and market moved to my direction. So I'm going to wait to get up here. If it doesn't get up here and it stays in here, I'm doing nothing because I'm looking to take daily trades with a 5-minute entry. Chart that looks almost the same, NASDAQ 100, new chart, NASDAQ 100. Okay, this one is even more interesting. Tight channel, breakout above it, small bull candle, the minimum the bulls could do to confirm that they're in control, but immediately reversed. Okay, so again, it's created a level of interest for me. If we get down to here, I'm assuming it's a trading range. I'm going to look for an entry, go look for an entry of the 5-minute and find where to put my stop. If we get up here, I'm going to look at the probability that this is going to fail because I'm thinking the bears that created this, obviously there has to be some pullback, profit taking, whatever the case may be. The bears would want to come back into the market and see if they can get back into the trading range. I mean, into the sloping trading range, into the channel. So waiting for those levels. Yen, first chart just gone. So there's nothing I'm going to be doing way up here. Unless we get like a 2-bar reversal or something. We get something like this or something like that to test the 10 EMA, that pullback, that kind of pullback to the 20 EMA, you can look for an entry. Now, it's basically the same trading that I do on the 5-minute, but I don't want to be flipping through 8 5-minute charts for trades. It's an impossibility for me to do that. So on the daily, I'll wait for pullbacks, or reversal setups. So that kind of trade, then we'll be looking on the 5-minute, because that's how we'll be trading on the 5-minute anyway, to see for a failed breakout and try and go long. So tight entry on the 5-minute and then hold it even for a couple of days for a pullback. So the 10 EMA is really the yellow zone here. Okay. If we get a 1 bar pullback that comes like a 2 bar reversal that comes back here, you can go look on the 5 minute to see if you get a decent enough reversal pattern to take a trade, because that magnet is right there. All-time high is right there. Although we had this trading range created here, the measured move is just above that. So let's hope for a pullback, which we can trade. Aussie is pretty close to the area that you want to be looking for possibly failure. This is a tight bull channel. So somewhere, today it's going to be worthwhile to see where we end. And then tomorrow, look at the low of this and see if we break beneath the low of the candle, if it comes right down to the trading range like we got here. Bull candle, huge bear candle, but then we had the reversal up, higher low. Okay, but now we know we have a channel. So if this candle closes down here, fantastic. Let's look at it. Now, if it sets up pretty neatly, this market's transition midnight my time, 3 hours before I start trading the Hang Seng 50. So usually I don't get up for that. I just leave it and let it go. And then I'll wait to see if maybe it's just gone sideways by the time I get up, and I'm still looking for my entry to go long. So back to our charts. No, we're in the charts. Hang Seng 50, we're still there. There's no, I was going to say there's no way to tighten our trade, our stop. We're tightening our stop to here, but it's pretty pointless. We're taking a risk. Let's just leave it. The market might come and test that top of this doji here. But if we get strong bear acceleration beneath this level, strong bear candle closing beneath that, a pullback that hasn't come back into the range, then we can legitimately just pull our stop down to maybe somewhere here and start to bank some profits. So what do these entries mean? So all big analysis we did at the open, that gave us a view that we should be looking for shorts. And where you see the red rectangles, that's where we took our short trades. Okay, so we said that's where we've taken our short trade. We spoke about where this the stop would be. Another entry was here. We talked about where we stop. We talked about where the stop would be. The next entry was here, and we spoke about where the stop would be. So those were stops that we have taken. And again, you don't have to take all the trades. You have to decide. You're managing your risk, you're managing your money. Decide that I'm going to take 1, 2, 3, or 4 trades. And when you've gone beyond break even and you've moved your stop appropriately to a position where you've locked in money, then you can still add on to the market. The other thing I mentioned to the guys, this was quite interesting. That happened so when we're in the morning session of Hang Seng 50 before it closed, let me just go back on my timeline. Okay, so I think the market closed. We're 7 o'clock there. So the market closed somewhere in here. And I kind of say to the guys, so not when the market closed. When we ended the session, 2 hours after the open, we're here, and we said to the guys, we had 1, 2, we said we're waiting for 3. Market tries to go up 3 times. When we get to here, whether we get a double top or lower high, we must take the trade. Okay, So when it opened before we came to next stage, this had set up beautiful. And this is one of those beautiful gifts you must just take. So as the market opened, it set that up. So that was a setup we're waiting for. That's why we sold that. And then that kind of materialized while we're in. So we put that entry there. Now, what I say to the guys is that while we are waiting, okay, because I'm kind of presenting to you guys and sharing price action strategies, I am waiting for certain setups to come towards us so that we can trade them. But I realized, just during the break, actually, that sometimes you may be thinking differently to how I'm thinking, looking at the same chart, which is perfectly fine. Okay. Why is that fine? Because if I'm going to buy, if I'm going to sell, it means someone is buying. So you might be having the view of a buyer, because if I'm looking to short and the market is like this, it means I'm in a trend, I'm in a reversal setup, reversal mindset. Reversal mindset means, and I put up earlier on, I'm just going to put it up again because that's pretty critical. Risk, time, reward. So reversal mindset means I am aware that the probability of success is low. So happy to get stopped out, but I should be able to manage my trades and hopefully minimize the actual losses. Traders, we're all traders. This is a trader's equation that we absolutely have to know backwards. So if you ever at a party and you really want to bore them, put them to sleep, tell them, you say, listen, let me tell you about the trader's equation. This is what we do in the market. I got a whole basket of cash here. I manage my risk. So I always take 1% out. That 1% I decide, that's what I'm going to put in the market. I decide to put the whole 1% in, or I break that 1% into 2 pieces or 3 pieces. Okay. At the most, I break my risk into 2 pieces. Okay. If I'm taking a trade, I'll talk about it to 2 pieces so that if it goes against me a little bit more, I can put the other piece in. But you can always put the full chunk in 1%. That's the risk. We manage that. Reward is linked to probability, but we decide when to take profits out of the market. Okay, why is it linked to probability? Because if you take in reversal trades have a lower chance of success, plus or minus 40% if you look at your whole ton of charts of success. But the profit, the reward is much more. If you're able to manage it and you don't get stopped out, you should be aiming to get a 3-to-1, 4-to-1, even more out of your reversal trades. So higher reward, lower probability, so we manage our trades. The other one, if you're trading based on trends, waiting for things to clearly set up, keep looking at the charts, there's no trend. Keep looking at the charts, there's no trend. When a trend materializes, then you wait for the pullback. Everyone can see we are in a trend. Everyone can see the pullback. So the reward is going to be less because everyone's going to jump in. Okay. Then the probability of success is higher, of course, because you can see where we're going to go. So lower reward, 1-to-1, lower probability, which is fantastic. Both are fine because you get stopped out less on trends, and you just pick your one-to-ones as you go along. Maybe 1 a day, maybe 2 a day, maybe 1 a week, maybe 2 a week, who knows. Reversal trades, there's a lot more trades that you take, but you got to manage your trades strictly. But when you get that one winner, is 3-4 times the reward in one day. So you don't have to worry about working too long. So I like to sit on my charts and guys say that's long. It's fantastic. It's probably 12 to 15 hours a day, but I don't work on Fridays. I don't work on Fridays at all. You know, I'm done. And most evenings by 6 p.m., I'm done. Okay, I don't need to do that because I can make a lot more money just on those 4 days. So then I explained, so that's risk reward probability. I explained to the guys that while I'm looking to sell, someone is looking to buy. People looking to buy, they can say, listen, you can scalp all day. Anytime you see a bull candle, buy, buy, buy. And as soon as it starts to turn, close. Sell, sell, sell. As soon as it starts to turn, close. Scalpers do that all day. I can't do that. It's extremely difficult to do. Let's say it's extremely difficult to do because I've tried to scalp, I've lost money, I just get frustrated. At the end of the day, and I say, but why were you scalping? This thing is so clear. You could have made more money by just waiting half the day and then taking a trade. So I stopped scalping, but if you can scalp, fantastic. By all means, go ahead. But there's another way of trading, which is called always in the market, where you're looking to take a trade when the market seems to be going in one direction. Okay. For example, here you can see the bears are all thinking we're going to sell up here, but this is a decent enough setup for you. So you buy above that and you put your stop in the correct place. Stop will be way down here. You don't put a tight stop and you let it go. As soon as it turns, you realize, oops, okay, I'm wrong. You exit the market, you wait to say, okay, if someone had to put a gun to my head and say, you have to take a trade, where is the next trade? Here you'd say, listen, don't press the trigger. This is a trading range. I can't do anything. I can't, you know, I could buy, sell, but I'm not going to do that. Let's wait for some movement. So you could sell anywhere in here and just wait for it. And as soon as you get a 2-bar reversal, you could exit. So it's a lot more trading than waiting for your one setup, but it's a legit, it's not as hectic as scalping if you can do it. So, and that's a trade that we took. So that's our trade. Now, if you're trading always in, big difference. We took that trade, big stop, and we just say, let's wait. If you're trading always in, you'd say, okay, let me sell. You see this, you exit, you close your trade. Okay, so you're no longer in the market. And then you buy, and you see all of this, and you say, okay, let me wait. You get up, the market turns, you close your trade. And if you're quick enough, you sell that. If not, you wait until you get clarity, which comes probably down here, and you start to sell. But we are holding on to our trades. We're not stressed, we're relaxed. You know, if we get stopped out, we wait again and we take a trade. So now we have the market closing beneath this level. The 3 bear candles could just tighten our stop a little bit above this trading range. I mean, already at break even, so there's not much to stress about. So I've got my own other charts working out here. Okay. All right, so let's go back to German theory. So here we are with German theory, right at the test of the wedge bottom. Very strong move by the bears. And we're trying to find a way to get into the market. Double bottom, 2-bar reversal, we don't have it as yet. So if the bears are strong, they will, I mean, that's the first candle to break out, tail at the bottom. But we really need a strong follow-through candle. They really need to go and break beneath here. Okay. Now, don't jump into a short at this stage because you'll be selling straight into support. Okay. If you're going to be selling at this stage, you're going to have to wait for a breakout pullback. So right now we wait and see if the bulls are able to defend this level of support, turn the market up, but because of the bear strength, might have to wait a little bit for another higher low double bottom. But let's wait. Bears are strong in the market. bodies increasing, slight breakout. It's still 4 minutes to go on this candle, so wait and see what happens. UK 100, double bottom, and let's wait and see what happens. We're right at this magnet. The bears are strong, they smash through this and don't get a tail on the bottom of the body. Give us a follow through, then the rest of the day we just wait until we get a pullback to test that. But let's wait and see what the market gives us. Okay, so key markets to watch. If we're at the level of resistance we wanted or support, by the time we get to the US Open, interest enough to go and see if we get entries of the US Open, but we're nowhere near what we're looking for. But we still look at it at the open, and see if we accelerate above the high of yesterday. And if we do and get to that level, whether it's at the open or just before, we really have to find ways to go short coming off that high. And 50. If we get a break beneath this little trading range, which is this higher low, this one by doji, if we get a break, some closing beneath this low, fantastic. We can pull our stop down again to that particular level. But let's wait a bit. Don't need to rush. We may get it. If not, it might come and test that and give us a double top. So you don't want to rush to tighten your stop. It's quite frustrating to get stopped out when you realize, why did I rush to tighten the stop? And the market turns and you're still feeling sorry for yourself. You missed the entry. By the time you recover, the market is moved all the way down here. So just leave the stop here. See whether we get this close down here or the market turns there. So I look at let's show you something that we're looking for in case this might fall within your time zones. The market has rejected that. So this low here, the low of this almost like a bit of a trading range, tails on top, tails below. Depending on how far we go today. Okay, if we go to the 5 minute. So I don't know what time you guys up, but all of this happens straight after midnight my time. So it's a little bit early. However, there's our yellow line, okay, that we're looking at. There is that channel, the channel that we looked at. Now, if today ends up somewhere near here, who knows what the market may do? Or if we just continue, keep going sideways. It will be worthwhile when tomorrow opens to see if the selling carries on to get to this level. And then if you get to this level and you see any form of price action, something like this, okay, like now we're looking at seeing we get, we're just looking, I think it's the UK 100 and the German. We're kind of talking of channels. It's not being precise. And market creates a channel, high low double bottom. You're going to look to take a trade, and then you kind of just use a measured move stop. Stop here. Why do we use measured move stops? Because we don't quite know where the bottom is, right? we're taking a reversal trade, hoping to make a lot more money off the trade. I mean, if you took that trade, stop here, and you got this, and then you took that pullback. Now everyone can see a trend, everyone jumps in here, but you take that trade as well, you make, your 3 to 4 to 1 quite easily. But you need a wide stop because it may be wrong with the low. It might just go up, come back, break beneath that low and get somewhere down here and then turn. In which case, if you're taking a reversal trade, you put half the risk there or a third. If it comes and turns here, you add the other part of it in, it accelerates, things that break even, then you can add a little bit more. So I'm just pointing that out. If you're going to look at the Aussie, that's something that definitely will be on my watch list. Now, I'll keep it on my watch list because by the time I get up, depending where it ends today. So let's assume, I know it won't end there because there's still a bit more time, but let's assume the day ends here. If it does its attempt to get to the bottom here, and it gives you a double bottom, and you see the end, you take it, measure, move. But for me, by the time I get up, it's a few hours later on. Maybe it's done all of that, maybe it's done the test, and I'm still within this zone near here. Then I'm going to look to sell and put a stop here, and then I am just going to leave it. Okay. So I thought I'll just mention that because that could be something worthwhile to look for tomorrow, definitely, because that's the channel we're talking about. That's the channel we're talking about. All right, last few minutes, have a quick look. Okay, so if you're still holding the trade from earlier on today, it's at stop a little bit more. I know it's good to try and bank more profits, but you gotta wait to see if you get any acceleration, any strong candle breaking out beneath this, then move your stop to here and wait to see what happens. Okay, if the bulls come back pretty strong, just leave it there. I mean, it's pretty well protected so far. Let's see if anything is setting up on. Okay, German 30. The bears are looking pretty strong. But now you gotta be saying, why do we have a tail on the breakout, a larger tail on the follow-through candle, almost 50%? And now we've got a minute to go, we might get an inside candle. So the bears are not demonstrating strength at this level. They have an opportunity just to smash through here, control the day. And if they do that, remember, you need to see a breakout candle closing on or near its low, like almost where DF, that tail is a bit problematic. In fact, the breakout candle was this one, by the way. This was the earlier low of the day, this red line. Okay, so that low is since shifted, but in the morning, that was the low of the day. That was a breakout candle. And then we wanted to see a follow through and we didn't get it. So we just got this trading range. So if the bears are going to control and take over the day and sell, that kind of breakout candle is fine, but we need a follow through without tails. Then we just wait for a pullback to trade. And lastly, UK 100. So it's setting up nicely. Just need to see probably one more strong bull candle. It might test a little bit more and look to go for longs there, guys. If you're doing that, at the very least, you need a measured move stop. That's the measured move stop. Okay, pretty close to the low of the day. Alternatively, you can just say the guys want to smash between that. So a conservative stop will be here because you're hoping that we accelerate all the way up. All right, guys, spot on time. Thank you for joining me. And if you're still joining Wednesdays at the market, US session, we will see you in exactly 3 hours. Take care, guys. Bye-bye.